And obviously, we're seeing shortages and we're seeing stress right throughout the commodity complex, but also in terms of oil and gas. So yeah. So I mean, all the factors, whether it's inflation and all the other sort of things we're seeing on the supply side, would suggest that there are shortages, etc.
One of the issues that you brought up in that whole thing was the truth about the physical availability or physical scarcity of silver in the system. And you were focusing on particularly one aspect of the system, and that was these large storage accounts where you could do pool allocated or unallocated storage. But there's a much bigger picture than that, and you actually drew a diagram that showed strain points in the global physical silver greater supply chain and system, all the way from mines to refiners to major exchanges to major wholesalers, retailers, and so on. And it leads into another discussion that has been ongoing. It's rather, I would say, hotly debated every time that we have an interviewee on, including Andy Schechtman from Miles Franklin or others who talk about physical scarcity in the silver market at the COMEX exchange or in the mints, the major shortages because of sovereign minted silver coins, for example, that sort of thing. There are constantly people who will write comments saying there's no physical shortage at all, lots of silver available, and so on. So is there or isn't there a physical silver shortage? And I think that we'll try to put the diagram up that you had created about a year ago that shows there are many strain points in the global physical silver supply chain. Can you bring us up to date on the latest awareness you have that you think people need to be aware of, where there are in fact emerging persistent or worsening strains in the global physical silver supply?
Sure. I mean, one of the interesting points, Flanagan, is that I had a conversation with people out of Singapore recently where their view was that there was no silver shortage. So basically, I mean, you are correct. You've got a supply chain from basically mine all the way through to the wholesale market, industrial users, and then you have in terms of your retail investors. So a lot of what people are suggesting, and obviously you have people who are supportive of the LBMA view of the world, the World Gold Council, the Silver Institute, etc. A lot of these people suggest that there's plenty of silver at the wholesale level. And there really is no deficit, but where the deficit is that, so for example, when you get a surge of retail demand, which is what happened in the United States, and I think Rick Raw's been on your channel and said that the increase in demand was about 10% compared to historical averages. So when you get a surge at the retail level, refiners can't keep up with that demand, and so the ability to take large, either unrefined amounts of silver or these large 1,000-ounce silver blocks at the wholesale level, and then melt them down into smaller products that Miles Franklin or As Good as Gold would sell, refiners can't keep up pace with that, and so that's why people like Andy would come on your show and say there is a scarcity because we just can't get enough product. And so some people say there is a real scarcity, and some people say that there's only a scarcity at the retail level because the ability to refine retail product is limited. And when you have a surge of retail demand, refiners can't catch up with that. So, you do have two schools of thought. The hardest thing I would say is, a lot of analysts have said this over the last few years, these markets, gold and silver, is very opaque. It's very hard to get accurate information. You do have some organizations like the World Gold Council and the Silver Institute putting out their view of the industry. Some people think their numbers are sort of reasonably accurate. Some people think that they are way off. So the only real way to get a feel for this is by closely analyzing what happens in terms of the market. And obviously the hardest part of this is that the market is, we're talking about the global market. So particularly in terms of India, India is a big buyer of silver. So when the Indians are buying large amounts of silver, that obviously places strain right across the wholesale market across the world. And then you start to hear stories out of London, where wholesalers or traders can't get, have to wait 3 months for in terms of delivery. So again, I mean, look, yeah, I mean, there are different points of view. It's very hard to know exactly what's going on, but in terms of the objective data, I mean, I think the Silver Institute just came out with a report saying that investment demand is expected to peak in 2022, the highest ever. There is a deficit. When we look at the COMEX data, in terms of both the eligible and the registered categories, we're back to where we were in, say, July 2020 in terms of the overall stock of supposed silver in the COMEX warehouse depository vaults. And obviously, we're seeing shortages and we're seeing stress right throughout the commodity complex, but also in terms of oil and gas. So I mean, all the factors, whether it's inflation and all the other sort of things we're seeing on the supply side, would suggest that there are shortages, etc. So I'm probably more in the camp that there are some critical points right across the supply chain that is getting under stress. But I would say also that I think, I mean, and you can sort of tell this by the social media traffic. I mean, last year, this time, I mean, everyone was talking silver. It was the hot topic. You and I were doing a lot of videos. We were getting a lot of views. Whereas now it seems like the market has sort of moved on. A lot of commentary about crypto, a lot of commentary about uranium, and I think some of the steam has come out of commentary about gold and silver. But it'll be obviously very interesting to see what happens as we go forward throughout 2022.
You mentioned something that was brought out on Arcadia Economics about the Silver Institute's forecast ahead for silver demand versus price forecast for the remainder of 2022, and I thought it pointed out a interesting dichotomy that has been all too familiar to many silver investors.
Yeah, yes. So I mean, I would recommend people go watch the Chris Markets video that he released today. But what Chris was talking about was that the Silver Institute put out a report saying that demand will peak, will be the highest ever in 2022 in terms of investment demand, and there is a deficit in terms of demand versus supply when you look at total demand, in terms of investment and industrial use versus what's coming out of the mines. But somehow the price is still going to fall 5%. So now, admittedly, I haven't reviewed the report myself. So when I get a chance in the next couple of days, I want to download the report and obviously try to understand how do they, I mean, obviously if you've got record demand, if you've got surging inflation, if you have a lot of people going to commodities because they're nervous about in terms of the bond market or the share market, etc., and we're starting to see, the stock market coming under some significant pressure, you would expect that commodity prices, and a lot of the commodity prices have gone through quite high substantially, but obviously gold and silver have not. And when you're getting a forecast that's saying that silver is likely to fall 5% in price, you start to scratch your head and saying, well, how does that make any sense? I mean, the only potential explanation that may make some sense is obviously if there's a significant increase in interest rates, whether US Federal Reserve or by other central banks, that could start to tame down inflation and inflation expectations, and there could be, that could have some impact in terms of price and in terms of gold and silver. But if the demand and supply picture is what the Silver Institute suggested it is, you would expect higher prices going through 2022, and to be honest, look, for a lot of investors, everyone is still extremely frustrated. I mean, if we look at where we were in 2020, I think we were stuck in the teens for quite a few years, and then all of a sudden in I think it was July, August of 2020, the market started to surge, and we went from about $17 an ounce US all the way up to about $29, $30, and for 2 years we haven't been able to crack $30. Now I have some ideas as to why that is. There have been things happening behind the background that I can't speak openly yet, but there could well be a new thesis, a new explanation as to why the price is stuck where it is, and there could be, I think, something that maybe most of your guests and most analysts in the market have been missing. So we'll obviously see whether the things that have been brought to my attention, whether they, whether they come to the surface or not. But basic economic theory suggests that the price should be able to crack $30 with all the factors that we've been able to see over the last 24 months, and it hasn't. And so there is something fundamentally wrong in the market. And so this is where you get into the big debate, to be honest. And there's a big debate among your guests. You have people like a Craig Hemke or a David Morgan who talk about systemic, multi-decade corruption and manipulation of the market. And then you have some of your other guests like Rick Rule, who says there's short-term manipulation, but there is no systemic long-term plan or conspiracy to manipulate the market. So I'm in the camp where the evidence is overwhelmingly clear, including some communiques that were released by WikiLeaks dating back to prior to the establishment of the futures market, the COMEX and the CFTC, where communication between American and British officials talked about using this CFTC COMEX paradigm to fix the price. So I think that communique was pretty clear as to what the intention of Western policymakers were, but why people like Rick Rule won't actually recognise that there is a grand conspiracy. I mean that perhaps at some point maybe you can have Rick and I on a joint show and we can actually have a debate as to how does underlying economic theory explain why the price is behaving why it is. Because I mean I've been studying economics. I'm 40 years old now. I started studying economics at 16, and everything I've learnt and read over more than 2 decades, it just doesn't make any sense in the context of the silver market in particular. I mean obviously gold is much higher than where it was in 1980, but in terms of silver, there is something more to the story than just basic demand and supply fundamentals.